Hello, this is Jordan. This video is being recorded on the evening of Thursday, August 18th, 2022. Thank you so much for joining me. In this video, I am going to discuss two leading indicators that could be two potential leading indicators for that Fed policy shift. And I want to give a shout out to Gary Tanashian. I follow him on Twitter. Check out his service and the work he does there. He noted these today, so I wanted to talk about them and share my observations along with one other thing. But definitely wanted to give a shout out because this was not something that I originally came up with. Okay, so those two leading indicators for a potential Fed pivot are the dollar and the gold silver ratio. Now, obviously, the dollar is much more significant in a Fed, with respect to Fed policy. They don't care about the gold silver ratio, but the gold silver ratio, it's important for the sector, the precious metal sector, and it often can trend in the same direction as the dollar, especially when you're coming into potential bottom in the precious metal sector. And I mean, it can also indicate potential risk aversion in general, but not always. So in this chart, we have gold, the 2-year yield, and that's the third thing. And then we have the US dollar, and at the very bottom, the gold silver ratio. And the vertical blue lines, those show the peaks in the 2-year. So we have the peak in 2000, then we have the peak in 2007. That is a slight lower high, but the peak in 2007 is really more significant, as you can see. The 2-year really collapsed after that. And then the next one was in late 2018. And so we haven't seen that peak in the 2-year yet. I mean, maybe we have if it can't surpass the recent high a couple of months ago. Who knows? Maybe it makes a double top. Maybe it surpasses that temporarily. But in any case, I wanted to point out here, if we look at those three vertical lines, what's interesting is almost in every case, you had the 2-year peak before you had peaks in the dollar in the gold silver ratio. So look what happened in 2000. The 2-year peaks well before the dollar and the gold silver ratio. And so 2007, it wasn't aligned perfectly, but that second peak, you could kind of call that a double top. But that one in the summer of 2007, you can see that the gold silver ratio, it didn't quite make a new low there in early 2008. So, I mean, that did trend higher after that peak in the 2-year. Now, the dollar did trend lower, but it ultimately went higher, obviously, and it peaked in early 2009. The gold-silver ratio peaked at the end of 2008. But, I mean, when the dollar and the gold-silver ratio were really declining in earnest, that didn't occur until after that peak in the 2-year. So that's the only time it wasn't clean. We can look at the 2018 scenario. At the end of 2018, the 2-year peaks. You can see the dollar continue to trend higher into that peak during the COVID crash, and the same could be said for gold and silver. So what does that mean for where we are here and now? Well, it means that, based on this history, if the 2-year, I mean, even if the 2-year is going, or even if it's already peaked, and if that peak will be confirmed in the coming weeks, history suggests that the dollar and the gold-silver ratio still have room to move higher. And so that would be, probably negative for markets in general. And, if that could provide some headwinds for precious metals, unless excuse me, I mean, it's probably going to provide headwinds initially, but if the 2-year starts to really come down aggressively or significantly, then at that point, you're definitely going to see a move higher in the gold market. But at least initially, Gold and precious metals could sell off as the dollar and the gold silver ratio climb higher. So these are just a couple key markets to watch. And when the 2-year ratio ultimately peaks and reverses and comes down in earnest, that's when you're going to get a sustained rebound in precious metals, in gold first and foremost, especially. I'll do another video on silver over the coming days. But if you look at the gold silver ratio, and I mentioned this in another video, you can see that gold, when you're coming out of a sector bottom, gold can outperform silver, for a while, unless that sector bottom is you have like a crash type bottom, like you had in 2008 and 2020, because you can see the huge surges in the gold silver ratio there into October 2008 or November 2008, and then during the the COVID crash in March 2020. So if you get that scenario where you get a crash type decline in the sector, where the gold silver ratio surges, maybe, it's, 91 right now, maybe it surges to 120. That's the kind of scenario where you have a real significant bottom in the sector to set up for a real big potential rebound, where silver is going to outperform immediately. But if you don't have that, and you kind of have more what happened in the second half or the last 4 months of 2018, that's the scenario where gold will outperform silver for a little while, and potentially probably until the Fed has to cut rates. That's just an initial guess on my part. But that's enough for this video. I know there was some droning on there, but just keep your eye on the dollar and the gold silver ratio, because they were correcting for a little while. It looks like they're turning up again, so keep your eye on those. We'll see if they can run to new highs, or if not. If they run to new highs, initially it's going to be negative for markets, negative for precious metals, but ultimately that's a good thing, because it'll bring us closer to that Fed policy shift. Thanks for listening. Leave me a comment below, and I'll talk to you guys in the next video.